18 minutes, so as we were told, maybe far away pretty quickly. Just by quick introduction, thank you very much for being here, but Greg Vosper with Blockdaemon. On the sales and business development side, I background in digital asset custody for 3 to 4 years. I've moved recently across to Blockdaemon to sort of help build out the MPC infrastructure, but also talk around staking and node support. Over to Jesper.
Yeah, hi, my name is Jesper. I'm the founder and CEO of Northstake. We specialize in regulatory compliant staking products. We're a regulated custodian and yeah, based out of Copenhagen, Denmark.
Mirko. All right. Hi. Yeah, very excited to be here talking about staking with you guys. So my name is Mirko. I'm CEO and co-founder at Staking Rewards. We are the leading data aggregator for the staking industry. Yeah, we have a website, stakingrewards.com, and basically helping investors to find the best staking partners for themselves by providing data and information on the industry.
Super, thank you. So yeah, we had a quick pre-chat before this was going to go out, and so tried to highlight probably 3 or 4 key areas that we want to discuss. And I think each of them are probably like 2 minutes each. So number one, so first of all, the question, will staking yields rise or drop in the future? There's a lot to discuss there. So 4 or 5 hours into now 15 minutes. So number one, what is staking? And I think, so Jesper, if you're comfortable, just giving a very basic outline of staking.
Sure, so there are many different definitions, I think, about staking, and it's perceived for, differently depending on who you are and how you sort of are watching the That's not a good sound. It's been confused with lending and borrowing and earn programs and so on, but the way that we define staking is active network participation, i.e. you run validator nodes on set networks, and for our clients who are excuse me, primarily institutional clients, it's very important to them that there's a full audit trail of the deposit of the funds, how it's staked on-chain, and subsequently the documentation of how the staking rewards were created through active network participation. So for us, it's very much a technical, operational exercise that we have to execute, and not necessarily a financial business model that enables staking.
Yeah, I think that's really important to highlight that staking, like we talk about staking yields, but actually staking is not really a yield. It's more like, yeah, it's just staking is a digital work agreement. So there are 2 components to it. Like one is like the work that like staking providers do as like services, kind of services towards the blockchain to like keep the blockchain secure, decentralized, and scalable. And then there are like the other component to staking is basically the guarantees. So the staking providers would like on one side provide the work, which is mostly like validating, attestating, producing blocks and so on. And then they are providing the guarantees that this work will be provided in the future. This is like the stake you put down, 32 ETH for Ethereum, for example. And then that's the guarantee that you're going to provide honest work in the future. So the blockchain can be assured that there will be people who are validating and keeping the blockchain secure, scalable, and decentralized.
Okay, thank you both. I guess so. That was going to be a basic touch on what is the basic of staking. I think we've gone slightly deeper into it. So I'll flick on to another question. And I know there's other panels that have talked about compliance, but it's more around what is our current view on the regulatory outlook. If we can touch a little bit on, I guess, the SEC, but I guess really focus on European. So where we're looking at MiCA, maybe some of the stuff in FINMA and also FCA, we can.
Sure. Is this better? Sounds better. Yeah, great. So if you look at how crypto regulation has evolved over the past couple of years, I think most notably we have markets and crypto assets regulation taking effect next year in the EU, and I think that was sort of a wake-up call, especially if you look across the pond to America, where you suddenly figured out quite rapidly that this growing industry needs regulation in order to continue its growth, and we're now seeing how regulators are struggling, especially in the US, to actually enforce rules on the industry, because there's similarly a lack from a policy standpoint in how we can define basic sort of basic legal definitions of what is a token, what is staking, so on and so forth, right? So our opinion, I think, is very much, I would say, we look at the SEC and say it's not necessarily a big surprise that they are trying to enforce existing regulatory frameworks important in the industry, and they are struggling to do that. It shows as a policy gap. At the same time, you can see how businesses, investments flow into the EU because of clarity on what the regulatory framework will look like for the coming years. So from our perspective, we're very bullish on Europe because of what a clear regulatory framework can enable.
Okay, thank you. And I guess just from a Blockdaemon perspective, just looking at the general market, we've seen a huge, well, essentially staking side dry up in the US, and that all of that has exploded then into European and Asian markets. I guess with that in mind, like there's the top question, yields rise or drop. Like, does the regulatory footprint, SEC, as and when they become more comfortable, do we think we'll see a spike in sort of broader use cases with staking, and does that have a grand effect?
Yeah, so the future of crypto is regulated crypto, and what regulated crypto means is that we create pathways for institutional clients to start engaging in crypto assets. That will be conducive for bringing the next billion users on chain, because what happens is that inflow of capital will sort of reinvigorate the networks, the communities that are building on chain to an extent where you can see an acceleration of the use cases that they are trying to put into the marketplace. And once we see that, that's sort of a flywheel effect where staking actually plays a crucial role in ensuring not only the integrity of the networks themselves, but they represent assets from a financial point of view that institutional investors understand, right? So again, this can only be done because professional investors have clarity on the regulatory frameworks.
Yeah, totally agree. And I think there's also two streams there. There's the developer mindset. How do we make great technology, and how does that move forward? And that's why there's other protocols and other types of proof of stake projects that will be ongoing, and people looking to create better pathways. And then there's also that fundamental traditional market. How do we access? And that's where the regulatory piece comes in. I think more so, again, from just anecdotally, where Blockdaemon will be working currently with clients, we have to walk forward to the FCA and essentially discuss the risk of a protocol and say, look, this is the current risk profile, or look at the tokenomics and say, FCA, this client is looking to do this. We'll have a three-way conversation for the FCA to get comfortable with that. And so education sort of underlines that.
Yeah, I think what's really exciting is that blockchains are supposed to be self-sustaining economies, and then if there's more activity in the network, it also means there can be a short-term rise in, for example, staking rewards towards the digital work providers, staking providers, and so on. And that's really exciting. I think if we ask about the question will the staking rewards go down or up in the long term, I think it's a matter of what type of work will be provided in the end, and how important is the work in general. And there I would say the basic work provision of validating and so on would probably be mostly commoditized in that sense, but there will be a lot of additional risk buckets where staking service providers can tap into providing additional work for the blockchains and expose the guarantees to a little bit of a higher risk to earn higher rewards as well.
Hey, thanks, Mirko. I want to touch on technology in a second and just advances there, but I just wanted to step back to, I think we were looking at yield generation. And so where at the fundamental piece element of staking is to support a protocol. So you delegate to a protocol to ensure the efficiency of the transactions that happen on that blockchain. There's other yield generation commentary around staking, and if we want to sort of touch on that slightly, so if we're looking at potential yield pools or structured products or others, what is the view there that also touches on the question above in terms of rise and fall, but also the risk profile of staking fundamental, and then the other classes.
Yeah.
Perhaps.
So, running validator nodes on a network is the first yield generating sort of layer in this stack on the blockchain. Now, those digital assets represent an inherent value that you can then start to work with from a structured finance point of view, which means that you can start building derivatives on top of that, you can start building structured products on top of that. Not unlike what you see sort of in traditional finance, but this is just we're talking about digital assets. But the staking itself represents the lowest risk threshold as well, because you have no credit risk, you have no liquidity risk necessarily, depending on the network and how deep the market is. But theoretically, that should be the case. Once you then start to build different types of yield-generating products on top of that, you will introduce counterparty risk, and this is, I think, what Northstake is focusing we're focusing on, which is how can you ensure that you thoroughly understand that counterparty risk, because from a decentralized blockchain point of view, we like to build a lot of interesting products that can sort of tie in together from a network perspective, try to build everything at the protocol level, which is great, but those products are not sort of mature from an institution point of view for at least 5 to 10 years. So we focus a lot on ensuring that we have a solid foundation with regards to the staking and validator nodes themselves, and then we have to turn to sort of off-chain concepts in order to build the next layers of derivatives or structured finance products.
Thank you. I'm going to actually just segue that straight onto technology with time. And so I guess just with generalized sort of technology advancement, so I guess all of the firms that are working sort of in that node space, validator space, are trying to create better efficiencies. The protocols themselves, and we can highlight Ethereum in the next piece, is where they naturally will say, look, we are currently at 32 Ethereum for one validator. That potentially will change in the coming months. I'm going to pass to you, Mirko, because this is your sort of space. And how do you see this changing? And just generally discussing the advancements in the industry and technology infrastructure.
Yeah, definitely. I think what's really exciting, and maybe also to come back to the other topic a little bit, because I think it's very much aligned together with, like, for example, liquid staking being the bridge between like the technology and like the base layer staking, where like players like Northstake come in and providing like very solid infrastructure. And then on the other side, it's basically the composability with DeFi, allowing it to build structured products and financial products and everything else on top of that, using the base layer staking rewards. And I think this is where most of the value accrual will happen going forward, with like the technology, like the blockchains will kind of optimize their efficiency more and more over time. So the base layer yields will go down because most of this will be commoditized, and probably a lot of the blockchains are also overpaying for security right now. So those rewards will go down. But on the other hand, there will be a lot of products that optimize and go a little bit higher in risk, bridging it to like the DeFi space and bridging it to the TradFi space as well. And there will be like much higher yields. And I think what is really exciting is that the technology allows us to build on top of it. So there is composability in it, which is permissionless and transparent and so on. So that's what's really exciting about the technology. I think that it's very flexible and composable to build a whole financial industry on top of that.
Okay, thanks, Mirko. Another point we were looking at is just generally the adoption or wider adoption. So where perhaps there's some individuals looking at staking now, and I stole some numbers from Staking Rewards this morning. So current sort of staking market cap is just north of 100 billion, of which I think Ethereum is probably close to 50% of that. And then there's next top 10 and probably holding the market share. Of that Ethereum, so close to 50 billion staked, that is only 20% of the Ethereum market. Where does that go? And it lines onto, I think, the next thing we were discussing, like what's the pathway forward, the next 1 billion person adoption. I don't know, I was going to pose it to you because we discussed it beforehand.
Sorry, I mean, if you believe in Web3 and the economy is being built on chain, you want to have a long position in crypto. A long position means that you will forgo the staking yield if you just hold it, i.e. you would need to stake it in order to ensure that you're holding this investment in a capital efficient way. What that means is that in and around itself, staking yields will drive more validator nodes as more institutional capital comes in. And that poses, from a technical point of view, some issues, because the more validator nodes you have on the network, the slower it becomes. You have to figure out what can you do in order to ensure that balance. Now, we like to think that the networks need to figure out how to create those balances themselves, and we will then adapt to that. Not unlike, I think, what we see in sort of other financial markets. Yeah, I hope that answers the question.
No, I think it does, and I think it was more about that fundamental pathway and opening up for the rest and wider adoption, so they're comfortable coming into the market, points of access. Another question is going to fall out of that, and I'm going to throw it open, and we didn't talk about this one beforehand, but where's the balance? Where's the balance between 2 minutes to go? Where's the balance between fundamental support of blockchain infrastructure and the requirement of staking to other market participants coming in, potentially the traditional markets coming in and saying, actually, I don't want to do the fundamental work, I want to go into a product that's outside of this ecosystem that's regulated and sponsored by perhaps a bank or other financial institution that provides some of those securities around their asset being put forward.
I mean, this is what we see now also play out, let's say, with FINMA in Switzerland, how regulators are struggling to sort of figure out how to manage this. What I would like to say is that the way that institutional adoption will drive this, they have to figure out how can they partner with the right people like yourselves and Northstake and others that understands how to operate from the ground up. So ring fencing, node infrastructure from an AML perspective. How do you then afterwards ensure that the yields that you generate can be reported in a way from a tax perspective and so on and so forth, right? And all of these things are now clashing because we just fundamentally need legal definitions of what crypto is, what staking is, and why we do it. That will in turn lead into a greater adoption. And yeah, we're running out of time. You're looking at this clock. Yeah. So we're very bullish, of course, in Northstake that staking will be the pathway for institutional adoption, i.e. that will lead to 1 billion users on chain eventually.
Okay.
Yeah, if I can just say quickly. So I think the adoption of staking is very much aligned with the adoption of crypto as well. But staking can still be like an accelerator for the crypto adoption because I think passive income and like earning rewards is always like a great incentive for people to come in. But it's never a way of, okay, I should just stake for the sake of staking. It's more like staking is an activity that you do if you are a long-term believer and investor into a certain asset. So that's a really important differentiation, I think. And then I think what's holding back the general crypto adoption is definitely like it's a matter of UX, providing like the best possible UX for institutions, for retail, for everyone to onboard to the industry from like the whole stack, from like finding the right tokens, like finding the best staking options, seeing like how does it work, and then having the tools for like reporting, taxes, and all of this. And yeah, I do hope that staking walls will play a key role in doing that for the staking UX going forward.
Yeah, perfect. I think we're going to we are timed out, but I've got one more bit. I guess fundamentally, we need, for any of the tokenization conversations that have probably been going ahead today with regards to banking and looking at real-world assets being tokenized, they're going to be on a chain. On this blockchain, that needs to be supported by delegated assets. Is it going to be the banks that buy up loads of Ethereum or other assets to then support that chain that allows the tokenization to be achieved, perhaps? But there's also going to be people in the market that are actively holding that asset and wanting to delegate to the chain as well. So I think that was number one. I mean, there's loads. If we had another half an hour, I think we'd get onto some.
We could probably talk forever on staking.
I think so. Last point is, what's the key takeaway of the title? Will staking yields rise or drop in the future? On the spot, Jesper, let's go.
Who knows? It will go up and down.
Okay.
Well, I think the base rate will go down, and apart from that, it will go up. So there will be tons of structured products and products building on top of the base rate, where I think there will be much more additional products and like much more products than, for example, in TradFi, because blockchain just allows us to be like very composable with other products, and then I think we'll see a lot of adoption from there, and I'm really excited for the space going forward.
Awesome. Thank you very much, guys. Please thank Jesper and Mirko here.